All right, folks, there we go. It's Thursday, August 10th. We got a nice show for you, nice big up. We had a great day on our morning show picks. So I'm going to go through that for about 5 minutes, and then we'll get Kris Tuttle here to talk to him about a couple exciting things. Okay, so first off, this morning CPI was light. So we were in a risk on mode this morning. And it's interesting that RK, our proxy for risk, is actually down this morning. And just technically speaking, I think at this point, RK could be making a move to the 20-week moving average that we've been talking about. Let's just go here, change to the weekly, and you can see we're almost there. So a little bit more downside for RK. What's interesting, though, is despite the fact that our proxy for risk is almost, I didn't expect it to be down on a soft CPI, but our risk assets are just doing great. Now, set aside SABR and SMSI and YTRA, which have individual catalysts, but to tell you the truth, even stocks with individual catalysts do not do well when RK is going down. That's been the pattern. So it's nice to see that. Even Overstock has tick for tick been following RK for the last couple of weeks, and now it's diverging. And if you go look down here, other of our top picks, risk assets like Tesla and Celsius and SMCI and Twilio and Fox, ACHR in our universe, PanW, that are doing really well today despite this confusing reaction in RK. But I'm not worried. I've been talking about, I did say that if we either come in line or if we come in light on CPI, then it's time for reversal, that a lot of this was priced in ahead of the event. The QQQ right off the 20 DMA. And you can see that here. Perfect bounce. I'm sorry, the 50 DMA, perfect bounce off the 50 DMA. There is a little bit of risk that SPY, because SPY still is in between two major moving averages. You see that between the 20 and the 50 day moving average. So a little bit of a risk there that we may need a further pullback. But what we're seeing here is just a lot of rotation. Rotation's bullish, right? It's not like everything goes down at the same time. When you see certain stocks going up or certain money going to certain sectors out of others, that's a bullish thing. The market's still constructive. These are just corrections that are happening and money moving around. Now, going to our top picks this morning, SABR just exploded up 10%. I mean, we've been in this for a couple weeks since earnings, but then we added more this morning on the insider buy last night and the break of the 50-week moving average, which you can see right there. We have a 6 to 8 swing target on it, and we'll get to Kris in just a second with his fundamental calculations on how much he thinks that's worth. SMSI, man, I bailed on SMSI at $2 right on the morning this morning. Wow, I was the first trade of the day. Thank God. February 27th, I got bearish on SMSI when they lost Verizon. I'm like, I don't want anything to do with this. I'm not touching this stock with the 10-foot pole right now. It's kryptonite. And I finally, like a couple months ago, I started a position at like 125. But this morning, we got in, I mean, as much as I could. Honestly, I still want a bigger position. Couldn't get our complete fill, and we actually added it. We had a small position for a hedge fund, but we made it one of our larger positions this morning here. So I'm now bullish. I'm now bullish on SMSI, and we'll save that, maybe that conversation with Kris. I'll just say this, that one of the biggest indicators that get me in, there's two things, but the fact that management is guiding for profitability in this current quarter, that's a big deal, all right? These flips to profitability, very, very important, especially for risk assets and microcaps. Okay, YTRA this morning, my friend and colleague Matt Kolb has been pushing this stock on me for many months, and I resisted. I wasn't interested. Finally, last night I was getting interested because of a confluence of factors. When we look at StoryTrading style, we're looking at the technicals, the sentiment, the catalyst. It was all coming together. So we have a catalyst coming up. IPO announcement expected anytime between now and the next 4 weeks. We have the nice technical indicators yesterday with heavy volume, 3 heavy volume days coming into today and right up against that 200-day moving average. So this morning on the morning show, I basically anticipated a break of the 200 DMA because this IPO is coming up and because of the recent technical signals. And man, did it go. We got in at 220 and averaged up most of the day here. So on YTRA, I'm going to give you a target of 275 to 3 just on this technical breakout. And then I'm looking for around 4 once they announce the IPO date, which could be. So like I'm looking for close to 100% move sometime within the next month. So YTRA, SMSI, SABR, 3 of our top picks all up Oh, it was greater than 10%. A little pullback in SABR at 9.9% and a little pullback in YTRA now below 10%. But man, we had some great picks this morning. Overstock, it's not breaking out yet. I mean, this has been a lot of pain holding this from 30 at the peak at 39. We got in originally probably in the high 20s or something like that, but we held it from the high 20s all the way to 39, didn't sell any, and we still like this. I'm monitoring the Bed Bath & Beyond app rankings, and they're still absolutely stellar. I mean, they're right in between Target and Etsy for 9 days in a row now, so that's going to be super bullish for fundamentals, and it's going to take a lot for this to retest 39, but I think it's coming, and then we're going to hit that 43 200 DMA on Overstock. All right. I can keep on going with some other things. I like SMCI here, but let me bring on Kris Tuttle. Hold on. Questions. Can you touch on Overstock? All right. So let me just do the interview of Kris Tuttle because I know he's in a little bit of a time crunch, and then we'll get to questions. So where are my buttons? Where's Kris? Come on. Where are we going? Here we go. Okay. Kris, how you doing?
Hey, Ben. I'm doing very well.
You're looking dapper.
Well, yeah, it's a conference. You know, you got to get out of your pajamas. You know, when you get out there.
Very cool. You're at the Canaccord Genuity conference.
Yeah. It's over now, basically, but it's been the last day and a half, 2 days or so.
Okay. Well, this is a great day for us to talk because right now, I think the two of us are aligned on at least 2 big stocks, maybe 3. Right? I've been talking about. Not me. I caught up. I was late to SABR. You and a lot of people in our community were talking about SABR. I finally got in on this last earnings report. And then SMSI had earnings yesterday. We can talk about that. And maybe if we have time, we'll talk about April. And that's like aligned with, it seems. So let's start with SABR. SABR, I have technically at this point, with the tailwinds of the fundamentals and everything and the buy last night, insider buy, I have a target of $6 to $8. So How do you like that? Does that make sense fundamentally? What are you looking for?
Well, look, Ben, SABR is a big, ugly piece of infrastructure. It's an asset. I mentioned to you in the chat, it's kind of an oligopoly. You've got Amadeus and you've got SABR. These are the old, reservation systems that have been around forever. They feed and get fed a lot of the data that everybody uses. So, the way I SABR is, really simplistically, these guys, like everyone else, got crushed by COVID, and when travel came to a screeching halt, stock went from 24 to 2. Amadeus did the same thing, and Amadeus is actually back to pretty close to back to where it was pre-COVID. And I think I see no reason why SABR can't basically make it back there as well. Their cost basis is now lower. So between 2019 and today, they've renewed a lot of contracts. Their cost basis is lower and more modern, so they can be, they're on a better technology platform. So I'm like, this is a situation where the debt gives them actually a lot of earnings leverage because as they cross into profitability, it results in $1 a share or more in earnings. So
they have a lot of debt. They have a lot of debt. How do you take that into account in terms of calculating the fair value here?
I still look at the PE, right? So if this is going to go to $1 or more a share in earnings on what's essentially a normalization to pre-COVID levels, then I've got a double-digit stock, and that's I own the common, and then I bought, as I mentioned to you, I've been using call options more now because the premiums have been a lot lower on some of these names, especially like a kind of a piece of junk stock like SABR, right? So the options were pretty cheap, and so I think this is a story. It's not. I don't feel like it's going to run away from you. I think this is probably a 2 or 3 quarter progression of consistently improved results. I think the insider buying is significant because I don't see much insider buying of any names right now. It's not that kind of environment, and it's a, especially when you see someone on the legal, lawyers are about the most risk averse people you can imagine. So when you see the general counsel buying stock, that's like, I weight that probably triple what I would weight a CEO, and then you got the CFO is conservative, and the most conservative person in the company from a risk standpoint is the general counsel.
Very, very interesting. Do you have any thoughts around these analysts, Mizuho and Morgan Stanley? They're like neutral, equal weight, CFRA, hold, all with price targets around like $5, $6. That's it seemed like a great earnings report.
Yeah, I don't know what they're basing their their view on. I guess I'd be more interested, I guess, if they had a buy on it and were like, yeah, we're gonna go neutral.
They all maintained, yeah.
But as far as I know, everybody left this thing for dead, and they're not going to see it as alive until maybe they print another quarter or two, and then they'd rather upgrade the stock at 8 than 6 probably.
You think it could be some skepticism or worry about the macroeconomy? Travel's been hot, but can all of a sudden, get slammed on the brakes? Is that the concern maybe the analysts have?
I think everybody is still worried about the consumer. I listen to calls in the car driving up here, like Real Vision, and people are like, everyone thought there was going to be a recession, and there's not going to be a recession, and it's all going to be good, and we're just going to power right through this. And then you see other reports from LVMH and some other luxury people saying, oh, we've seen a slowdown in consumer buying or consumer behavior. So there's a lot of what I would call mixed signals out there. I worry about the consumer and the inventory correction and all that kind of thing. But so far it just hasn't been that bad, right? Like nothing has really been that bad. People are still kind of doing what they want to do. So if you were really worried about the consumer, then a lot more stocks would be down more probably than they are.
Yeah. So when do you think we can get to $1 EPS run rate on this?
I mean, that's not until run rate.
25-cent quarter.
I mean, I don't have a quarterly model, so I can't pull it up right now. I mean, I think that's a 2024 event. I mean, I'd rather actually get home this afternoon and dig into the numbers and do a model at least for the year, and then I'd probably get a pretty good idea when they would hit that run rate. Because I'd like to know. Makes a big difference. Is it Q2 or is it Q4 next year? Right.
Yeah,
that's a big difference.
Right, because then then it becomes a little easier for average Joes like me to say, this is a $10 to $20 stock. But for right now, I'm in on these convergence of all these catalysts, technicals, insider buying, the upgrade they did of the guidance, and then I'm in on all that, looking for 6 to 8 for now. But definitely, I want to keep close eye on this story, and maybe we get to that 10 or 20 in 2024. That'd be nice.
Yeah, we'll see. It's you got to stay on these things. It takes a while.
Okay, great. Would you like to talk about SMSI?
Well, I mean, I think everybody knows the SMSI story. I have been one of those people that has, lived through this company's delays and poor guidance and kind of asshole IR guy, and the list goes on. Having said all that, I understand what they're doing and what they're delivering, and I understand how sticky that is. And so, I own a lot of SMSI. I told you in the chat I own a lot of call options because when this was everybody thought this thing was dead. I mean, it traded under $1 for a little while. And this is one of those things where, once it gets going, like the thing that's so weird about a stock like this is like everybody loves to hate it, and they're far from perfect. But AT&T hasn't even launched yet. AT&T launches and they're successful.
Isn't that next week?
Yeah, but I mean, if AT&T launches and it's a big success, the stock can really go. and everyone would go like, I can't believe SMSI, can really go, because everybody hates it so much because of the way they're emotional. But I'm just like, could this go to $10? Absolutely. I'm not saying it is, but it could. I mean, there's nothing. Once they're now that they're embedded in AT&T launches this thing. I know there's demand for the product. So to whatever extent AT&T executes, this is recurring revenue. Don't forget, right? So, investors are going to respond to the numbers as they come in, and I'm sure it'll have its ups and downs. It'll be volatile, but I'm not selling a share here at 142. I mean, I've after all my suffering on this thing, I would like to make a lot of money on this stock now that they're getting into better days ahead where they can actually begin to grow.
Yeah, that sounds good. And I've been buying today. I still don't have as much as I want. I've been buying from the low 120s all the way up here to 144. I bought some even up here. So technically, let's just take a look at this and see if that kind of squares with the fundamentals. Right now, we're in between the 50 and the 200 DMA, and we cleared a lot of candle resistance over here. There's the next resistance here is a little bit of resistance at 150, and then after 150, we have the 200 DMA, which is a big resistance, important level. Obviously, everyone knows that. So 150 and then 175 are the next two resistance levels above. That would take us to a market cap of, let's see, 175 times 63 million shares. Let's do that. So that would take us to a market cap of $110 million. Do you think this company is worth at least $110 million today, or do they need, AT&T to really come through and hit it out of the ballpark to get over that market cap level?
If I were if I were Tom Bravo or somebody like that, I wouldn't even blink at paying like $250 million for this.
Who's Tom Bravo? I'm sorry.
They're a big private equity firm in the technology space. Because what they've built, if you wanted to build what they've built, like part of the reason we've all been so frustrated is it's really, really hard and frustrating and ugly. And, and that's an asset. Now, obviously we're not, using our valuation, based on an asset model. We want to see the growth in the earnings. But if you wanted to replicate this asset, it would cost you a lot, and you'd still be facing all those uncertainties and hurdles and integration problems. So, so I think they built something, the harder something is to build, usually the more worthwhile it is. So I think they've accrued a lot of value in what they have right now. They're still beholden to AT&T to monetize it, but it's very clear that AT&T loves this product. We have that from them, not from SMSI. So, I'm very happy to have not gotten shaken out. I'm happy that we're hopefully finally on the other side of this thing.
That's awesome. I'm happy to have left it too and got back in this morning.
Yeah. Well, opportunity cost, right? I mean, that's the smart way to play in the world we're living in now. Like even a lot of the companies I saw, I think there's some interesting ideas that I picked up here at the conference. I'm not in a rush to buy them. I'm going to do my work, and you know what? If they work, I could be buying them 50% higher, but they'll be going up 3 or 4x from there. Yep. But I can afford to wait until we see the fundamentals actually come through.
Yep. And there's different ways to make money. I totally respect what you and other fundamental investors do, holding based on value, holding for the long term. We try to time markets at StoryTrading based on a combination of fundamentals, catalyst, sentiment, and technical. So that's worked out brilliantly in this case on SMSI. Look at it. It's butting up against this 145 high. It looks really beautiful, like a little cup and handle forming over here. Well, there's no handle. Yeah, there's a cup and a handle, and let's try to break out here. That'll be fun. Okay, so that was SMSI. I wanted to maybe talk to you about Apron, because I think you saw Apron today.
Yeah, and I did see them. I talked to them offline a little bit as well.
Okay, so this has been one that I'm dabbling in. We have a position in, and it's been frustrating trading. has a lot of potential if they can flip to profitability, I believe. But what did he learn today? What are your thoughts on Apron now?
I mean, I like Apron. I think they can, now with the 30 million on the balance sheet and the moves that they've made to get to profitability, they're 100% focused on profitability, and their customers are, their good customers are very good, right? Like they're spending more, they're spending frequently.
Can I just interject? Right, I
Yes.
gotta interject. Right
Okay.
now, I don't know if anyone's interested in buying SMSI, but there's a little market inefficiency right now. The September $1 calls, there's a huge ask at 45 cents, but there's no shares available at $1.45. So it's actually cheaper to buy these $1 calls at 45 cents and try to buy the stock in the open market, just in case anyone's looking at that. Wanted to point that out. All right, go ahead.
Oh, that's interesting. But yeah, so I think they're going to be able to show this increase in profitability. It's the one thing that I hit them pretty hard on is the fact that they have not canceled the ATM, so the ATM is still out there. Mm-hmm. They feel that at the current level of the stock price, it's not appropriate to use the ATM, but they're not intending to cancel it. Now, what I said is, we're going to talk to them some more, but I'm like, hey, you know what? There's a right way and there's a wrong way to do this. Don't do it the wrong way. Don't just keep this thing out there and nobody knows when the hell you're going to use it or et cetera. There's ways to do this institutionally via a block transaction or something like that, where we don't have this constant leakage where we can never be confident, when there's a bunch of stock going to show up on the offer. But that is still a factor to consider. And it makes me, some people argue with me about this. I don't care. I have a hard time having, you'll probably never see me with a full position in a stock that has an ATM. It's just not going to happen because I want to see that done before
You missed out on Air then. They had a couple ATMs running on their move up from 16 to 50. That was crazy.
Well, I guess Air is an exception, right? If you're Air or you're on semiconductor or you're a very powerful, profitable, institutional quality company, right? It's way different doing an ATM with Goldman Sachs than it is with Maxim. You know what I'm saying?
Yeah, fair enough.
That's the problem, right?
Fair enough.
So that's really what I'm trying to say.
If you talk to management again, you can tell them that I can confirm what you're saying because I've seen it on social media that a lot of people have been pointing to the ATM and saying, well, if you're in a good position now, if you're forecasting, you have all this cash and you have a path to profitability, why haven't you canceled the ATM yet? A lot of people are looking at that. Yeah. And
you have 30 million. You say you can get to cash flow profitability. So why do we have to worry about that ATM? And, they did say some stuff about M&A, during their presentation, which, I'm not sure investors right now would have an appetite for Blue Apron doing M&A. But, like I said, the only wrinkle, and it's the significant one, is that ATM. We are going to circle back with them. And talk to them about.
If they cancel that ATM, I would think this stock goes to $10 to $15 pretty quickly.
Yeah, I think they need to evaluate how they're doing financing, and I think that they could do it a lot smarter than what they're doing right now.
Yeah. Okay. Good. Keep pushing them on that. We don't need another XXII situation. That's a
shame. There's one that coulda, woulda, shoulda on that one, and they really blew us up.
Yeah, that was terrible. Okay. All right. Anything else on your plate you want to cover, or anything new?
That's it for now. I'm gonna, there were a bunch of stocks that, are interesting. Could be potential names. I need to throw them through the Tuttle machine, the fundamental machine when I get back to my office with my, all my screens and databases and stuff. And maybe we'll find some really good ideas that we can share with the community that'll give us some new names to look at.
That'll be great. And if you want to be part of that Tuttle machine, head on over to ipocandy.com. You can sign up for a newsletter over there. And if you want to be part of StoryTrading, we do our show every morning, where this morning we picked SMSI, SABR, YTRA, YTRA, all up 10% this morning. We picked them at 9 a.m. If you want to be part of that community, You can go to storytrading.com/app, download our app. You get a 1-week free trial. By the way, we also have a watch list, real-time data, news feeds. It's very early stages, but it's pretty good stuff we're building, so you can check that out. Kris, thank you very much. Appreciate your time.
All right. Thanks a lot, Ben.
Yep.
Talk to you next week.
Yep.
Bye-bye.
Take care. Bye-bye. All right. And let me just see, before we hang up, let's just give a look because we're quick this morning before Kris came on. Is there anything else we've got to cover? Drio had earnings, and we've avoided Drio. Okay. We've been out of Drio since $4. And good thing we're still out of Drio. I'm still waiting. I'm not interested yet until we get closer. It's SMSI, like a couple quarters behind right now. Right? The similarities are uncannily similar. It's an SMSI situation. Now we're waiting for Aetna to launch, and Aetna keeps getting delayed. Now they're saying Aetna's pushed back to January 1st, but it'll be a bigger opportunity. Access to 30 million members instead of 10 million members. So one day, Drio can be a multi-bagger, but just like I waited on SMSI for the signal, I'm going to wait on Drio. All right? I'm going to be trying to time the markets. That's what we do at Story Trading. Whoever says you can't time markets, that's not true. You can when you look at markets holistically. You consider the technicals, the fundamentals, the catalysts, and the sentiment. Very important to consider the sentiment. And the sentiment of Drio is very low because there's worries about credibility. People aren't sure if this Aetna will actually launch, even though they're saying it will. So if and when it becomes really clear that launch is imminent, or maybe I'll just get in when it launches. If I have to pay a 30% premium on January 2nd, maybe I'll do that. So we'll continue to monitor Drio. Man, Celsius, huge winner for us. This was our largest long-term position in our hedge fund, and we had a 20% day out of it yesterday. That's looking absolutely gorgeous. And that's about it. So I'm going to leave you here. If you want to join our community again, we'll have our 9 a.m. pre-market prep show tomorrow, and hopefully we'll have a few more winners for you tomorrow morning at 9 a.m. See you at storytrading.com/app. Thanks, everyone, for joining. Take care.
It's not easy to understand why stocks go up and down, but even in volatile markets, there's always a discoverable and logical reason behind price action. Story Trading is a social investing community of investors who share information to uncover the hidden stories behind the trade through the 4 pillars of fundamentals, catalyst, sentiment, and technicals. All price action can be understood through the lens of these pillars, allowing for a holistic view that empowers better decision-making. Only by understanding markets can you beat them. Join our community today and start making sense of markets.